Morning, guys. Today is March 20th, 2017. Actually, it's the 21st on my day, which is Wednesday morning. Wanted to get a brief video out to you guys since we didn't do a live session this week. The first of which are a couple of topics, and the biggest topic of the day actually is following trade plans. And we're sitting in a trade that we've got to manage. It's unfortunately not gone the right way, and actually I kind of did this on purpose. I knew it was a little bit of a risky trade, but I wanted to give it a try and get it out there to demonstrate how we follow trade plans when things either go wrong or right. And that play is on Disney. Here we have the chart of Disney on the daily as of today, the 20th. And our trade plan basically stated that we were going to close the trade if we had two closes over 112.52, which is about this line here, or one close over the descending trend line. And really, it was the descending trend line that I was looking at. The original 112.52 is actually what we were talking about back here. That I didn't think it was going to get past that line. So today we've got a close over the descending trend line and a close over the 112.52. It's time to go. We were originally in this trade on the 13th of the month for 72 cents credit per contract, and like I said, it's time to go. We're gonna take a loss here. Right now, the credit spread is trading somewhere in the range of 90 to 95 cents, so we're gonna be taking a loss. It does at this point is below our 400 risk that we're going to take, and that was a risk worth taking for me. Unfortunately, I didn't think about Beauty and the Beast. I'm a technical trader. I don't look at the news. Well, it is what it is. But I think it's a very good demonstration of having a plan in place and what you're doing and making sure you follow the plan. So the order is going in just right before market to sell this thing for whatever I can get, or whatever I have to buy it back for. Hopefully it won't be more than 90 or 95 cents. Hopefully we don't gap up. If we're really lucky, we're going to gap down. And if we do gap down on Disney, I can tell you this right now, I'm still going to get out of this. The rule is it broke my rule, and I'm getting out. I am currently looking at a few opportunities. I wanted to get these out to you guys to take a look at, and I will put together a trade plan for two of them. I'm going to put a trade plan together for one long and one short, but let's just take a look at them, and then we'll see what we're going to think about doing. One of the long opportunities I've been looking at for some time, and actually I'm not even sure if we can call this a long opportunity because we have earnings coming up in the next couple of days. But with Micron technology, MU, we've been kind of in this ladder pattern where you actually have this nice sustained move up in this channel, and then you get a little bit of a retracement consolidation, and then it goes back up. And you can notice that actually the slope in the retracements usually is about the same. And I thought that maybe we were going to come down here at one point. I was looking for a long opportunity. We had another channel. Or possibly there's been some good consolidation period here, right here. So we can put that line there. And now the question is, are we going to go up? So I'm watching earnings. I don't have a trade plan for this yet, but I think if in the next couple of days we can take a look at what happens at earnings. If we see a gap down on earnings right down into this region, you may want to take a risk with a really tight stop on doing some kind of calls. And they should be nice and cheap at that point. They're kind of expensive right now because the IV is a little bit high. On the flip side, if you do gap up and you hit that channel, that also is a opportunity for it to go down. But again, I would see it go down in that kind of slope. So watch for a retracement, and then as soon as it hits that bottom channel, that's our trigger. So maybe it's a little bit of a longer term type of opportunity for us to watch. The second long opportunity that I'm looking at is on NVIDIA. And what we have going on here is almost in a similar situation as MU, is we've got a zone entry that's already entered. We've got some ascending trend lines that it's bounced off of, and we have actually some moves happening. I'm looking at a potential of a 1030 cross over somewhere in here, which if it does cross over, that's going to be an indication it's going to continue to go up with a projected target of roughly this region in here. Okay. Now, the thing to be careful about on this one is that we did have a big increase on the day today, the 20th, of 3.19%. So usually what happens when we get those big increases is I usually am looking for, at that point, is I'm looking for a retracement of about roughly half of the candle size, right about down into that region. So if I see it retracing on the day to right around the 108 to 107.85 region, by the end of the day, I'm going to think about entering a call with a very, very tight stop of 10% below that on the call itself. So again, we'll put a trade plan together on that one as well after I review these charts. And on to the shorts. So the first short opportunity that I'm seeing right now is on SBUX, Starbucks. And what's going on here is I'm following what we call the 1030 dance. And I've also got a whole bunch of other stuff on here that you can see. Zoom out. We got an ascending trend line. We got a descending trend line there. We got another big longer term descending trend line. And we got a Fibonacci. And it does follow the Fibonacci pretty well, I've found in the past. So what I'm actually looking at this point is I'm seeing a 1030 dance going on. And as you might remember, as soon as it starts moving up, which is right about there, I'm expecting it at this point to go up to the 1030, and for that to count as the dance, the first hit, we got to come down. And that little doji red candle right there is telling me that it could come down. So we're going to see what happens if we get any kind of bounce off of the 20 SMA and the 10 SMA right up here on the 21st. I'll probably be taking puts on this one with a tight stop of anything above, any close above these. I'm going to be looking out a little bit further on this one, but the expectation is that we would come down into this range. So if we do have any kind of bounce there, that is a move that is worth $1 there, all the way down to it's about $1.50, $2. So there's an opportunity for a double there. So we'll put together a trade plan on this one as well. The second short opportunity is on Lululemon. I don't know what that is. Don't they make spandex or something like that, or some kind of yoga pants? So Lulu, L-U-L-U. And this has been in a descending trend for some time, since the beginning of the year. And it keeps hitting that line and it keeps going down. So what I am looking at here is this is an opportunity. If we see an increase up into this range here, along that trend line, if we see any kind of movement up, touch, or even open right around that line, for me that is a short opportunity. The bid ask may be a little bit wide on this, so we're going to take a look at that later on. I'm just saying it's not triggered yet, but certainly put it on your watch list for a short that if it goes up, that is a potential short. JPM is going to get an honorable mention. I don't know which way this is going to go. We have a resistance line right at the 90. This tends to actually get resistance right on whole numbers. We've had some ascending trend lines. It's been bouncing off the top of that. We've got another one down kind of on the bottom. It could go either way. I just don't know what's going to happen on this one. I wouldn't normally take a straddle on something like this because it doesn't really move as much as I'd like to see when I do straddles. So what I'm looking for is either a bounce on $90 or I'm looking for a break of that 90 range. If it does break, I'm not going to take any kind of position. I'm going to wait till it comes on and tries to hit this line right here. If it does start bouncing, I probably will consider taking a trade. Because if it bounces, it could resume that climb, and we've got a fairly nice amount of profit potential there. I'm not going to put a trade plan together on this. Just keep this on your watch list because banks have kind of been zooming in quite a bit lately, and I don't know if they're really done with what's been happening in the marketplace and what Trump has been doing. For NVIDIA, my trade plan is to go into a bull call spread. I don't like the price of the option, so I'm going to try to reduce that a little bit. And that bull call spread is I'm going to go for a 110, 112. So long 110 and short 112s. April 21st. There are 31 days to expiry on the close on Tuesday. That order is only contingent on NVIDIA retracing to $108. So that's about half of the candle from Monday. And that's if it does retrace to there, my good till order my good till canceled order will be triggered. I'm putting that in for an estimated 72 cents. And if it does, I'll get a little buzz on my phone, and I'll take a look at it and see if it's in that region. And I may trigger that if it's somewhere between 70 and 75 cents. Entry rationale is ascending channel, pending 1030 crossover, positive momentum confirmed by the ADX in the zone. You have a technical stop loss. I will close this at whatever loss I have. If it closes below the 30 simple moving average, which is about the $106 region. I do have a technical profit target. If it happens to get that far, I don't think it'll go that fast, but it's on the ascending trend line that we saw. And position size, I'm going to go for 27 contracts, assuming 72 cents a contract, with a stop loss of $600, which is roughly a third, a little bit less than a third, with a profit target of a double. I will evaluate this on Friday if it happens to fill on Tuesday, which is 28 days to expiry, and see where it's at. And if it's doing well, I may convert that into something else, or if it's not doing so well, maybe I keep it, or maybe I'll just close it because it's not going where I want it to go. For Starbucks, my plan is to put an order in for puts. I'm going to go for straight puts. I've been going for the April 21st, $56, which is right about at the money. That is contingent on SBUX being between 55.80 and 55.90. If it's not between those on open, the order is not going to trigger, or so it's a contingent order. And then if it does trigger, I'm putting in 88 cents a contract, which is currently the mid price. And it may go up and down and stuff, but eventually it may fill if the price of SBUX is in that range. Entry rationale is the 1030 dance. We crossed over the 10. Now I'm expecting to go below the 10, and I'm expecting it to go down to that ascending trend line. I do have a technical stop loss of one close above the 20 SMA, which should result in about a loss of roughly 1/3, about $600. I do have a profit target of $1,936, which is also my risk, 22 contracts. And my plan is that if this does happen to fill on Tuesday, I will evaluate on Friday of this week, with the intention of actually closing on Friday this week with whatever profit I have, if it's not at a double. So that is MoneyTree this week. It's really much more useful to do these things on live sessions because it's going to be interactive, but as promised, I am getting these videos out as much as I can. We'll see what happens with the planned trades, see if they fill. I'll get something out again if they do fill, so to let you guys know so you can track it or do whatever you're going to do with them. Again, these are not necessarily recommendations for you to go off and trade. These are ideas, just kind of looking over my shoulder and what I'm doing. And you can hopefully learn from the way I put together trade plans and follow those trade plans, whether I win or lose. Thanks.